What is going on, investors? Hopefully you guys are doing well out there. Time to pick up the story of Pinterest, ticker symbol PINS. Over the last year, stock's down pretty big, down 45% year to date, down about 31%. But after reporting Q3 earnings last week on the 27th, the stock started skyrocketing, up 13% in one day, now up to close to $25 per share. We'll certainly come over here and look at this from a technical perspective. Some nice things going on from that sense, but we've got to get into these earnings. Those revenues came in the most recent quarter at $685 million. That was just 8.2% year over year growth, but it did beat expectations by roughly about $18 million. We'll talk about the monthly active users and kind of the average revenue per user here in a moment, but they gave us Q4 guidance over at Pinterest, and they gave it to us in a kind of a convoluted way. They basically said that their revenue will grow kind of mid-single digits year over year. That was essentially in line with analyst estimates. Analyst estimates for the upcoming fourth quarter is right around $888 million. That would be about 5% growth, which would be mid-single digits. Now, the high-end estimate is closer to $914 million. The low end is really not much underneath where the average estimate is, about $888 million. We'll assume that Pinterest is able to hit that mark, but they also gave us some clues into profitability. They say that their Q4 non-GAAP operating expenses to grow in the low double-digit percentage quarter over quarter, and for the full year they expect their non-GAAP operating expenses to grow around 35% year over year. So when the company is growing just kind of low single digits and they're comping out their expenses to grow 35%, well, yeah, these financials have actually started to turn over, and not in a good way. Now, what we are seeing on Wall Street is, for the most part, analysts either haven't brought back in their back half 2023 estimates, or they believe things are going to start getting much better for the companies, because we're seeing in Q2, Q3 of next year, that is when growth is going to reaccelerate back up into kind of a low double digit and nearly mid-teens grower for Pinterest. And I'm seeing this across the board in the ad space. You're seeing it with Google. You're seeing it maybe to a lesser degree with Meta, but other online advertising space expected to reaccelerate towards the back half, the spring, fall of next year. We'll see if Pinterest is able to accomplish that. Now, the company does have an activist investor involved. It looks like Elliott has about a 9% stake in Pinterest. They're pushing for this company to sell itself, as it's worth roughly $14.85 billion. Now, the problem obviously with Pinterest is, where is the buyer going to come from? Obviously, from a regulatory perspective, we know that Google and even Meta, and there's probably a handful of other companies out there, probably like a Microsoft as well. Shoot, maybe even Apple. I don't know. All of those companies certainly have the money, but when it comes to the regulatory environment that we are in, do they really want to go head to head, toe for toe with this FTC that is in charge, that is basically challenging every single deal that these companies do? Absent of that regulatory environment, I actually think Pinterest would have already long been acquired and been taken private or absorbed into like a Google or a Meta a long time ago. So the push to sell the company is actually not bad advice. The problem is, there's just simply not enough companies out there that are able to buy this company and clear the regulatory hurdle that at least is in place with the current administration, and likely no matter what administration comes another 2 years from now. Now, when we've been looking at Pinterest, they've had solid international growth in terms of their monthly active users. That's outside of the United States and Canada, and even a little more to agree outside of Europe as well. But what I noticed in the most recent quarter is we basically have flatlined on those monthly active users. Those were basically flat year over year. They're actually down in the key market of United States and Canada, and essentially flat in Europe and the rest of the world. In terms of the average revenue per user, or ARPU, you are seeing gains there. So you do have advertisers paying a little bit more to monetize against the same number of users that Pinterest had a year ago on a quarterly basis. Obviously, that key market here in the United States and Canada, they earn $6.13 per user, whereas globally it's just $1.56. And in the rest of the world, where they actually have the bulk of the users, over 230 million of them, you earn just 11 cents per user over 3 months. So They definitely need to continue to grow that, and you do see that they did over 38%. But I am a little concerned with Pinterest, the fact that their user growth is starting to stall out. And when you couple that with these Q3 financials, it kind of creates a double thing that I'm now worried about. We had that revenue coming in at $684 million. Again, that was about 8% growth year over year. Last year, you were closer to about $633 million. Now, unfortunately, with Pinterest, they do have a new executive team. I've noticed they've kind of reworked their financials. They're presenting them in a little bit different way, very similar to Google, as I believe the CEO used to work for Google. Maybe he's got an accelerated compensation package. Maybe he's bringing in his own team and they're accelerating that compensation package, because look at your total cost and expenses year over year. It went from 534 all the way up to 753, nearly 754. So added nearly $200 million to that expense line when you only grew your revenues by about $52 million. So your income from operation at Pinterest really shriveled up. One of the things that we liked about this company is they were still growing their user base, particularly outside of the United States. But even in the United States, it was growing to a lesser degree, but they were growing it profitably. Last year, income from operations were $98 million. You come all the way down to net income, you actually earn close to $94 million, but now it's turned upside down. You lost nearly $70 million in the most recent quarter, and it's really frustrating. And you come all the way down to net income, you lost about $65 million, or about 10 cents per diluted share. Last year, again, you earned 14 cents, and it doesn't look like it's going to get any better for the upcoming fourth quarter, because if we take the company's word for it and we'll give them credit for $900 million, but then we grow quarter over quarter the operating expenses by kind of a mid double digit number, as they said in their Q4 guidance, they actually say kind of a low double digit number. That's still going to put you at maybe just a break even at best, and probably losing money at this company. Not as excited about what I have seen going on over at Pinterest as I was maybe in previous quarters. But that's just from a profit and loss perspective. Obviously, you understand from a cash flow perspective, they are recognizing some of that share-based compensation as cash on that stock-based compensation. So they get to add that back in, close to $326 million of that in their 9-month ended cash flow statement here, where you pull down a net income loss of $113 million. Again, last year they had positive net income, positive cash flows, positive user growth. Everything was really lining up with Pinterest, and I really actually like this stock. It's kind of a sleeper, like if you already own Google, maybe Meta before it really took its U-turn. This was kind of a cool stock to own, maybe take some profits on it, get exposure to that ad network and that ad growth without maybe just being all in on like a Google. But the financials have turned around. So you lost $113 million, but you do get to add back in all this stock-based compensation at $326 million. And you come down here to net cash provided by operating activities. It's actually not that bad, okay? You had positive cash flows through 9 months last year at 541. This year, close to 411. So depending on how you want to look at this, if you think that this profit and loss statement, this is just kind of a one-time thing, or maybe over the next 12 months or so, the company is going to gain its footing and start churning out GAAP profits again. Well, you flow down here to cash flows and you see that it's down basically over $100 million over last year in terms of the positive cash flows, but it's not as bad as I've seen with other companies, certainly when we look at Snap. They didn't really do a lot with this cash. This is a very asset-light business. They didn't do a lot with this $410 million worth of positive cash flow. And they actually increased their cash year over year by over $251 million. When you come over here to the balance sheet, they've got plenty of cash. They basically have like no liabilities over at this company. That's what would make this a very attractive acquisition target, is the fact that they have basically no liabilities. They have all of this cash. In fact, I think you can come down here to total assets and see that the company has roughly $3.7 billion worth of total assets. If you just want to focus on the more kind of quote unquote cash assets, it's about $3.3 billion. And you come over here again, the company has about, we'll call that a $15 billion valuation. X cash, you're looking at like 11 or $12 billion. Again, that's a mountain of money that only a handful of companies can afford. And unfortunately, those handful of companies that can afford this stock would have to then spend a boatload of money on corporate attorneys in order to get a deal like this, like combine a Google and a Pinterest, or a Microsoft and a Pinterest, even like a PayPal and a Pinterest, which was rumored when the stock was much higher, could have trouble getting through that regulatory environment that we're seeing. Now, coming over here and looking at this from a technical perspective, it doesn't look too bad. Obviously, I mean, look, if you bought the stock at a higher price, just forget it. That goes for a lot of stocks, not just Pinterest. So don't blame yourself if you bought at these higher prices. Just understand, like, get out. Once the momentum rolls over in these stocks, obviously it's easy to see this now, but man, this stock started rolling over. At the very least, you should have got out here at $36 per share. Those were the previous highs that it made kind of right initially when it went public. Now, absent of buying this at much higher prices, look, it's actually making a nice series of kind of higher lows more recently, and it's making a nice series of higher highs as well. Now, it is at an area of resistance. I'll change this red line to say like purple. This purple line should be some resistance, exactly where the stock is right now. We'll call it $25 per share. It was support back here in 2019, acted as resistance back in 2020. Once you launched up over it, you actually gapped over this back in 2020. It's hesitated on it a little bit. Again, the $25 price tag. And here we are now. Wouldn't surprise me if this stock pulls back in the coming days, back to this red trend line, creating another series of higher lows that would really only take you back from like 25 down to like maybe $22, $23 per share. But I certainly wouldn't be alarmed if this stock does that. But the key is this one has to get above this $25 price tag. You get above the $25 price tag, and there is a gap here. There's some airspace here. I could see the stock comfortably getting back into the $30 per share if the momentum stays on its side. If the momentum breaks to the downside, you will have broken through about $20 per share. If you break 20, you are almost guaranteed to retest the lows that you made back in May and June. That would take you into kind of the mid-teens price tag on Pinterest. Right now, from a technical setup, it's not this huge risk reward trade. I think you've got $5 to $10 in upside with $5 to $10 in downside on this one. If you're comfortable with that, by all means, this certainly isn't the worst stock that we look at here on the channel, but the financials aren't as good as they were a year ago. In fact, they've turned negative from an operating perspective, and the cash flows haven't diminished, but they're certainly lower than they were a year ago. The positives are offset by the fact they have virtually no liabilities. They have a mountain of cash, and so they can actually spend and to invest in this company. The other thing that has turned negative, at least from an investor standpoint, are the monthly active users. It looks like we have stalled out at Pinterest, and so reinvesting into the platform and into the app needs to have a payoff of increasing the monthly active users and that ARPU eventually. If you believe in this company, this is not the worst spot to accumulate shares. I just wouldn't be very aggressive here because, again, if you do break to the downside on this one, should be a pretty sharp downside with nearly $10. Overall, it's an interesting stock. I would absolutely take profits in a name like this. If you're like me and you're long Google and that's kind of your long advertising namespace, and maybe you have exposure through Amazon and Microsoft and maybe even Meta as well, I view Pinterest as one you can play kind of the bounces and capture some profit that you might not want to take in a Google as you let that investment run. That was Pinterest. Hopefully, guys enjoyed today's video. We'll be back again soon with more. Good luck with your investments.